Good morning, everybody. Happy Tuesday. Welcome back. Daily profit plan. Let's get started. It is December 30th. We are almost to the end of the year. Hopefully, everyone had a chance to check out my video post yesterday. I shared the link in Telegram. Um, Data-driven macro suggesting minus 40 to plus 20. That's from some pretty smart people that I follow up on. Also, there is, I don't know, I think it was a Bloomberg survey. It's like 21 different offices, but every office is bullish. Um, I'm a little contrarian on that. Um, I I think the last time we had that was, ooh, I don't know, not a good result. But also for the market to expect a fourth year of gains, we haven't seen that. Well, 3 year of gains, we haven't seen that since 2007. Post 2007, 2008, we had a 3 year run that was pretty impressive, but asking for it to do it again. So I just this video is like 45 minutes long. I spent a lot of time just like, look, I don't know what 2026 is going to give us. Um, I'm playing with a lot of margin for error. I'm not getting heavily positioned on anything. I still think there is there's a house edge. I mentioned, new services coming in a couple of weeks. A little spot check that I'm going to do every single Friday, end of market and pre-market Mondays. We'll have levels ready to rip. And that was the trade that I looked at yesterday. I shared this with Lance in the group yesterday. Everything is lining up, so we have 1 hour, 4 hour daily bullish. Macro still looks good on those time frames. These are the levels that I was watching. Either the 6,900 looking for a bounce or the 68 to 50 looking for a bounce. And the trades based on the level 6903, 6848, 690, and 685. So this would be the kind of standard. The standard trade if you want to trade SPX, and this would be the cost effective because neither one of these have to worry about assignment. These are indexes, so they cash settle. But a 690, 685 and XXP, you can take this trade for as little as $50. And the SPX, you can take that for as little as $250. So, small risk or large risk, whatever you're comfortable with, whatever that percentage might be. These are two instruments I'll be looking to trade. And then these are the trades that I posted. Expiration, looking out for Monday, And the good thing is the top trade got filled. So my level zero trade, the 690 by 685 got filled for 250 yesterday. So as long as we stay above 6897.50, it's a break even trade. If we stay above 6,900, it's a full winner. Okay. XSP, similar, just a credit spread, 690 by 689 for 50 cents. That was filled. 689.50 is my break even. If we're above that, great. Let's take a look at some gamma today. So today is the 30th. Positive gamma back around. I'll look for the pivot point here for this transition zone, but 69.25 is my largest gamma of the day. Interesting how quickly that 7,000 gamma evaporated, although it is here, but it's a negative gamma. Curious if we can still make a run to it. So that was to me, that was a big target, number one, and a resistance level, number two. So I think if we can get some flows, I mean, today, tomorrow, trading as usual. Markets are likely going to be thin. What was our plus minus yesterday? We had plus minus pre-market around like 28. When opening bell hit, it was like 2150. My notes from yesterday. 2150. What did we do for the day? Pretty much finished flat. So here, up 16 points. down 13 points, finished on the day about a 3 point move. So, I mean, a nice market maker day. I'm still cautious for this week, just in case there is a bit of direction. Here's our gamma again on the charts, 69.25. We're opening a little bit softer with futures down about 0.05%. But if we get back above, if we stay above 6,900, that looks pretty encouraging. Get above 6,905, 25 being our biggest level on the day. Okay. So we will see how that plays out for the morning. It's something I subscribe to it. So I have affiliate links. If you want this on TradingView, it's a service called Tanuki Trade. I subscribe to them. I have an affiliate link. It saves you like 10 or 20%. And then I also have Dynamic Trends, which I use that for zero DTE. That's right here. This team at Dynamic Trend actually built me a zero DTE platform that saves like, I don't know, $2,500 or something. So it's like $940 for the year. It's one of the few tools that I don't mind spending money on every year. It does help me, every single day with my decisions. And if it's not opening up, then I guess it's in the background somewhere. I've had my computer on sleep mode for the last week, doing some content. So let's see if I can find it. There we go. Okay, open that back up. So if you're in my Discord, try to find it here. In my Discord, there's a video that I posted yesterday inside of the education updates. So education updates, here's dynamic trends. There's my code. That's my zero DT platform that's been built. I pay 3,600 a year for this, but they built me a zero DT that's down to 945. So if you just want to focus on stocks, I mean, really, this is really effective on like Mag 7 stocks because options are so heavy and they're super liquid. So SPY, Qs, SPX, Mag 7, getting some, zero DT is pretty fantastic. So if you want to trade like Thursdays and Fridays on Mag 7 stocks, you want to trade every single day on SPX, SPY, QQQ. It is my visual roadmap that I use every single day. So that's the one that has all the pink and blue through the day. I'll show that right here. And then the other one is Tanuki Trade, which I put in here under affiliates and discounts. Let's see. I think it's under Trading View. This one here. So Tanuki Trade, I can give you 10% off an annual subscription. And this one's pretty cost effective. It's like that makes it about $450 for the year. What's nice about this is you will have the Trading View indicators, which are not just, this updates 5 times a day. So you'll get some live feeds here. Now the real time, this is real time. If you want to see where things are going, like literally every minute, tick by tick, this is real time for a dynamic trend. So we have pre-market. You can see the bigger gamma levels on SPX around 69.25. As long as we stay above 69.05, that would be positive gamma. So if we're up here, I would expect price to be able to find, this level is kind of acting as a target, but also resistance. And I'd say this is kind of resistance 2 in this cluster up here. But if we stay above 69.05, it's easy for price to drift up here. I don't magically call levels through the day. It's a lot of noise trading every single day. This helps eliminate and clarify a lot of that market movement. Why is price moving somewhere? Because order flows are going that way. It's a big driver of price. So this is pre-market. And then once we go live here at 9:30, flip this to live. And then we'll see how this all changes. So if something stands out today like, hey, we're getting a big level at 69.50. Well, it's going to start popping up on my chart with a large level right here, and this fills up across. So we'll have kind of a target 1 and target 2 for the day, right? If something happens where we gap lower and go lower, then we'll start to see that these levels will fill up and these levels will start to decrease. So like I said, in real time, you can kind of figure out if you want to look at some zero DTE, how to trade. What type of trades do I like to look at for zero DTE? What we do for daily profit play, obviously, is looking for the big ranges. What we do for, zero DTE in general, it's like if you're looking directional, if you want to trade directional, if I think that price can go here, directionally speaking, a couple of trades we can benefit from. You can do a bull call spread. You can do a bull put spread, right? That means we're going to essentially, trade down here, buy low, and have price go higher so we can make money. A bull call spread is a debit spread, and a bull put spread is a credit spread. But if we're, essentially putting our position in and price is going higher, that's what's going to get you paid on that trade. If we wanted to put a butterfly spread, so price is trading here, we think price can move up to, like, let's say we open up at 69.05 and we think price can go to 69.30 or 40. We can put a butterfly spread up here trying to capture that move into that butterfly spread, which is a profit trap type trade. So you have your, buy call, pin at the sell calls, buy call here, and that gives you a profit trap. The profit trap is full at the end of the day at expiration, which is very difficult to do to perfectly pin price. However, during the trading day, the net gets a little bit wider. That's not the right color to use. The net gets a little bit wider through the day. If price is gravitating up towards our spread, we should see real price offer some profit. And typically these are, 50% on risk, even up to 100% return on risk well before expiration. When the trap price might offer a 5-to-1, might offer a 9-to-1, which are excellent reward to risk opportunities. But managing the winning side of this trade is the most important piece. You can take a bunch of winners on butterfly spreads if you get some general direction. Case in point, we just did this trade, live last week where we did that profit trap. It was a 69.50 and a 69.75 and a 7,000, right? That was a butterfly trap that we did for a 12/31 expiration. So 12/31 expiration. At the time we took this trade, price was trading around 68.70, 68.80. So we were trading quite a bit out of the money. For a 25 wide, I mean, we had a $1.05 debit that pays as much as $23.95. So it's a monster reward to risk, but how do you get that huge profit? Price has to be inside of this trap. 69.50 to 75 to 7,000. My break even price would be 69.51.05 all the way to 69.98.95. If we're inside that profit trap, there's my dollar risk. There's my profit trap. Okay. But the nice part is as this trade was taken 100 plus points below current price, we have price that went all the way up to 69.45, and the left side of my butterfly spread was offering profit and offering profit. Okay. Friday last week, this trade was up $4.55 credit, which is way more than what we were risking if you protected it. So I took the trade off at 205. And that was it because we had other trades in. So it was like of a $2 butterfly, it was a $2 broken wing, a $2 broken wing. So I had $2 and $2 of those broken wings. I took like $1.10 and trying to think. No, one closed for 70 cents and one closed for 90 cents. So $2 down to 70 cents, $2 down to 90 cents, and then the 105 was trading up to 205. So winner and a winner and a winner. all last week. What do we how do we think that? Well, we thought on the broken wings price would go higher, so we got paid on those. And on the butterfly spread, we thought that we would get inside at least like price flowing towards our trap that we set, and that happened. But after yesterday's sell-off and being that tomorrow is the expiration for this trade, if price is not back above 69.50, this trade doesn't make any money. So the nice part is you have forgiveness on a trade like this, but if you don't manage the winning side of this trade, if it's offered, it can, turn against you and be an inexpensive, but a trade that doesn't make any profit. Right? Yeah, nice. Sean says took 245. Very nice. Pinpoint for the fly is at the call. Yeah, that's a good way to do it. Yep. I mean, that is a pretty simple trade. So here's an example. Let's say we open up right here. Futures is flat this morning, like down 0.05. So we might open up a little bit softer than 69.06 where we closed yesterday. But if we think that price can get to 69.25, an easy trade would be you pin this thing at 69.25. And I talk about this is my double up trade service. So I do this for double ups when I'm liking the order flows. So you would do the 69.25, you'd sell two calls. I'll just type. I'm just taking a freaking freehand, and this looks like crap. So I could do a buy 69.15 call with one contract. I can sell the 69.25 call with two contracts, and I can buy the 69.35 call with one contract. That's probably going to be like $1.25 to $2 debit. Okay. And the goal is, okay, so let's say this is my trade. My profit trap is sitting right here. Now, the profit trap isn't full until the end of the day at expiration. So if we're exactly at 69.25 at the close, right? If we're exactly at 69.25 at the close at 4 p.m. today, this trade, let's say, and I can look at it first thing this morning, but let's say it's offering $1.50 debit. Okay. Well, I can risk maximum $1.50. I can make a maximum of 10, which gives me a net $8.50. Okay. So I can make $8.50 net over $1.50, which is pretty decent. Right? $8.50 over $1.50. I can make 5, almost 6 to 1 on the trade. The reality of that trade is it offers me almost 6 to 1, but even if it gives me a directional push and I can close this thing for a 50% return or a 100% return, okay, that's what I do for my double up trades is if I can get 100+%, I take the profit. So if I do a single trade for the day, I don't mind taking 50 to 100% anytime. If I do a, call, or I do a butterfly spread here and a butterfly spread down here, I'm looking to see if I can net, let's say this one nets 125 or 150, and this one is 0. As long as I can walk away with some net profit, I can literally trade the market either direction, right? So anyway, there's a lot of ways to do it. It's just having software like this certainly helps because it gives me the conviction and the confidence that, hey, I think we're going to have some flows going up today, right? Same thing on this. This is also live gamma. My reading for today is that 69.25 is probably going to see some push towards it. And if it fills up where we start to get the 69.50 revisited, the high was 45 recently. So if we get back to 69.50, could we get into 7,000 by tomorrow? Well, take a look. 69.25 by tomorrow is gettable. 69.50 is one of my largest gamma levels by tomorrow. And then by Friday, you can see here that the positive gamma is still significantly higher than the negative. So it's just if prices are drifting higher, 69.50 I think is very gettable. 7,000 is gettable, right? So anyway, I do this stuff every single day. If I didn't have tools like this, there's no way that I would trade daily profit play. There's no way. I should say this daily profit play. You don't technically need all this because this is giving you kind of directional prices and pin prices. Daily profit play is based on the expected moves in the market efficiency. So that's not what the strategy calls for. But if I wanted to defend certain levels, if I wanted to trade to certain levels, the nice thing is, getting some simple like debit spreads or credit spreads or butterfly spreads and set them up for decent reward to risk and good probabilities. It's nice to know when you look at a chart every single day that you have some ounce of direction, or some ounce of a market plan. I've said many times, like, look, there could be just one big fat outlier level, way up here. Let's say it's just this huge gamma level up here. And I just kind of look at it for the day. I'm like, all right, well, if price is going to get there, let's see it happen. So a really simple trade is price opens here and I position for either that direction to happen. And like I said, a bull call spread or a bull put spread, just price goes up. If you do a debit spread, you close it for a higher credit. You do a credit spread, you close it for a lesser debit. And those are winning trades with the direction. If you do a butterfly spread, you can typically turn a butterfly spread to a 50 to 100% winner. And if you want to hold it later in the day, if this trade is hit by, let's say, 1 p.m., if by 1 p.m. the trade is sitting around this gamma level that you positioned on, you can probably see 150 to 200% gain. Return on risk. So pretty good stuff. All right, these tools. Let's see here. Have you given your high and low? Not yet. Yep. Sean says you can set up 3 traps. I know, and I do it a lot. I do that a lot in the background. Look, it is difficult to pin price. End of the day, pinning price is very, very difficult. It does cost money, but sometimes if I looked at it like, it's just talking a variety of strategies here. But if I did generally speaking, if I did like a butterfly trap in here, butterfly trap in here, and butterfly trap in here, what do I need in order to win the day? By 1 p.m. or 2 p.m. or 2:30 p.m. or 3 p.m., obviously take it to the close if you want to, but by probably 2 to 3 p.m. Eastern time, if price is hanging out in one of these levels, all these trades probably offer, like, these ones may offer like a 6 to 1, maybe up to a 9 to 1. This one probably same thing, 6 to 1 or up to a 9 to 1. This one probably offers like a 3 to 1. If you're trading around current price, it's going to offer like a 3 to 1 or so, 2 to 1, which is not my favorite. I like to go a little bit out of the money and have a much higher, reward to risk. But if I, think prices are going to stay within a certain level and I throw like one trap that I think I'm confident in, and then another trap is kind of a backup plan, as long as this winner. So if I lose here, let's say that I lose, let's say this one's $1.50. Let's say this one cost me $1.25 and this one cost me $1.25. So what do I need to make? If I'm going to lose $2.75 on one of these trades, let's say I'm losing, potentially up to $2.75 on 2 losses. Okay, so what do I need the other one to make? If I get into, this one for $1.25, I need to close at least for a $4 winner. Okay. And if I'm 10 wide, I can close it out for $7, $8, $9. If I'm 15 wide, I can close it out for, $12, $13, $14. So I can make up for that. I can still like win one trade, lose 2 trades, and win the day. Okay. Where does this trade go wrong? Where does this trade go wrong? Well, it's low risk for the day, but where does this trade go wrong? If price goes too high or goes too low, none of my traps are correct. So again, as I say with options, like, there's always a trade-off. This is a great plan every single day. Okay. But there's a trade-off, and sometimes this can get a little pricey. Sometimes if I throw 3 traps out there, I'm kind of holding on to them later into the day, wanting to see one of these traps offer the most profit. But it can be slippery. I mean, you've possibly seen me do this before. I post it in Telegram. I'll talk about the trades. But if we're here and I box it in, I say, hey, look, I've got a profit trap right here. Okay. And then I look at these gamma levels. I'm like, all right, I'll put a profit trap up here. And then another one that I'm like, well, in case it falls down to this gamma level, I put a profit trap here. Now I'm doing this kind of showing an example because there's still a weakness in my trading, right? What happens if price finishes the day right in between my traps? I make $0. right? So I don't care if this is a 10 to 1 on every single trap. If it finishes inside, if I want to hold this thing all day long and it finishes inside, or I'm sorry, I guess in between my profit traps, I make $0. I lose three trades, I win zero trades, and I don't make any money, right? So, you know, there's a trade off. It's a great trade. It's great reward to risk. If we get into a profit trap late in the day, you can make a ton of money. But if it's not like overlapped properly, or if price goes too high or too low, this is my risk for the day. But this is also very contained risk, right? I mean, at most, I could probably risk 3, 4, $500 on the day, with the potential of each one of these to offer me $1,000. You know, I mean that's pretty good. That like one winner can make up for all of these and have one pretty good day. And the wider we go, I mean, I've taken trades as little as, like $1.50 for a 20 wide profit trap, which means I can make 18.50 to risk $1.50. That trade can easily offer $300 to $500 a day. You don't have to have this huge hold it all day profit trap. It's like if you're just in the vicinity, you could see $300 to $400 a day. But is that enough to offset the other trades? If it is, and here's what I would do. Generally, if I do this type of trade, um, as long as I'm netting, like 100 to $200, I'm probably going to take the profit, because I know the hardest thing to do is hold it all day. That being said, this software also helps me pin prices. Where if we have, and there's this yellow box right here, that this is my positive and negative gamma point. Um, who remembers yesterday that I said 69.10 is an important level? 69.10 was my positive negative gamma. If I did again, butterfly spread, for example, at 69.10, it finished about 4 points off of that. If I did 10 wide, I would have made probably like $400 to $500 on that trade. Okay. So there's a lot of ways to do it. All this is having a plan and having a couple of go-to strategies. So, one thing that would be easy to think about is just an example, that kind of walkthrough there for the butterfly spreads, especially, is what I do almost exclusively in my double up service. If you're still like new to options, even getting some basic bullish spreads or bearish spreads in my practical options, either the quick course or the full course, just to have a sense of this is where price can go for the day. Let's see if we can make some money. Okay. So now that we are live, I need to open up a broker platform. I forgot to have that open. Sorry. These levels are live now. Yes. So right here, here's pre-market. 69.25 was my big level. 69.05 is my pivot point. And right now, 69.25 is the, kind of the biggest magnet for price this morning, is right around the 50% and right around that 69.25. So I'm going to open up the platform and see what that would be trading for right now. Okay, I'm just curious. We still have our bonus trades from yesterday that were filled. We're trading at 69.05. Hopefully, we see some flows to the upside today, so we can make a buck or so. I've got the trade filled for $1 and $1.20. I think yesterday it was offering up like $1.35 or $1.40 on that same trade. SPX. So for the day, we're looking at a plus or minus 20, 21. If I wanted to pin something around 25, I could do a 15 by 25 by 35. So, I've taken a few of these trades in my day. I've had a feeling it'd be about $1.25 or $1.50, and it is. So for a dollar, $1.45, $1.50 debit, you can make up the $10 profit if you're inside this profit trap at the end of the day. Okay. So it's not terribly expensive. This is also very cheap. I can pay 40 cents to make up to $5. Okay. The issue with this one is this one pays the most at the very end of the day. Like if you're going into like 3 p.m., 3:30 p.m., this one has a chance. You got to be really, really spot on with that 69.25. If you go a little bit wider, like a 10 wide or a 15 wide, okay, for $330, I can make up to $15. If price gets into this area at all, that should be a pretty easy way to make some profit. So as far as like throwing out risk on the day, that's kind of my favorite way to do it is like a 10 or 15 wide butterfly spread and see if we can get into, a gamma level for the day. Okay. So do I love this trade? I mean, for the day, kind of, but we're trading at 69.03. This is at 69.25. Our plus minus on the day is what? 25. So we have to have the upside of the expected range get hit. With low volume standard daily profit play, probably not. I'm just gonna chill, man. Like honestly, if we want to go full tilt daily profit play, I'm doing it next week. Like next week on the 5th or the following week on the 12th, markets return as business as usual. I want to see like normal liquidity back into the markets. So, it's okay to take a break. We've had over 550 trades in the last year and a half. So it's like I can afford to wait a couple of days if I'm not confident that the market's going to stay within the expected range. Only a plus minus 2021. It's easy for prices to slip 25, 30 points today. Whether that's up or down, I don't know. But we're going to see if we can kind of hold the 6,900 handle. If we get above 6,905 today, then you'll see the market sell some puts. You'll see the market sell some calls. It will drive flows up. Positive gamma is a really good environment for markets to drift higher. Okay. If I'm looking at a standard daily profit play, I'm going to have to do something around let's see here. I mean, it'd be lovely to see price drift up to like 15 or 20 today. Let me check this. I'm going to go. So I'll go fairly short term. This will be out to Friday the 2nd. So some of my flows out to Friday. I mean, 6,900 is a pretty big level. 6,925 is a big level. I'm not seeing much above that right now if I'm going out to Friday. But when I go to Friday here the 2nd, we're starting to see that 69, 25, and 50 are the big levels that I think price can maybe find this week. 69.25 is right here. 69.50 is right here. I think the surprise move would be a challenge to get to 7,000 this week. It's possible, but I think between 69.25 and 50, that's probably a better bet as far as like where price can go this week. Okay. What determines if it's positive, negative, gamma? Well, it's a calculation, and it's also based on what like order flows are positive for the day. So if we have more like call options than put options, we have call option sentiment that's better. We'll see that based on the calculation of like call side versus put side, you'll see positive gamma flows on calls. So if people are selling puts, that's positive gamma. If people are buying calls, that's positive gamma. If people are selling calls and buying puts, that's negative gamma. I'll say that again. So if we are, and this is all in the options chain, right? So as orders come in, if you see positive gamma will be dictated by order flows coming in with selling puts and buying calls. Negative gamma is going to be the opposite flows. You're going to see that people are buying puts and they're selling calls. Okay. So when one side gets bigger than the other, let's say that the positive gamma is growing larger, then you're going to have more upside magnets, more upside targets, because this is what the option chains are getting filled with. Lots of buy calls, lots of sell puts. Okay. If the order flows are getting filled with this, that's likely going to drift markets lower. I should say, pull markets lower, make markets fall lower. This is way higher volatility, by the way. Negative gamma is typically like bigger swings up and down. Positive gamma is usually slow and steady. Okay. So again, daily roadmap is pretty nice. All right. Let's see. Let me go back to short term here. I'm going to go ultra short term. These are tools that I've that I've subscribed to for the last few years. I've had this one, Dynamic Trend. I've had this one for 6 years. I use this on the institutional side for a couple of years, and I kept it as a retail trader. And then I've worked really closely with the development team. They built me this tool. So they built me this exclusively for like me. I wanted an exclusive zero DT bundle because I traded all the time. So they built that, and it's a pretty good price. So instead of like, I pay like 3,600 bucks a year for this thing. It's one of the most expensive items that I pay for every single year. But it's pretty easy to make. Um, I'll just it's pretty easy to make money in this tool. You see me use it every day. I'll tell you this. This tool makes you feel pretty smart. When I could say with conviction, like, hey, I think 69.25 is a gettable price today, and lo and behold, price works its magic and then works its way up to it, that feels pretty good. There's not a lot of tools that give you that type of confidence. So I do like it. There you go. Penny says, use dynamic trends through your link. Use it all the time. Awesome. Yep. Slow and steady implies lower volatility. Yes. If the market's going up, you're going to see slower volatility, right? If markets are going higher, you'll see a lower VIX. You gave out trades yesterday. They're good today. They are still, yep, Larry uses every day. So anyone that's purchased, Dynamic Trend as a subscription through me, you know, again, I use it every day. I think the traders that are serious about trading this stuff, 0 day, 1 day, they use it every day. I wouldn't. I'm telling you, I mean this. If I was forced to trade zero DTE, I would have zero confidence in trading direction in a zero DT environment without this tool. Zero confidence. It's totally noise, right? But this reduces a lot of that noise and actually gives you a reason and evidence of where order flows are going. So that's a good way to look at the price every single day. And it's part about why I love trading zero DT is because you have an opportunity every single day. Every single day. So that is not a bad opportunity if you ask me. Anyway, if you're interested, here's the deal. If you are interested, let's see, does not have it should. Maybe you can just change the settings. So if you go into the study here, it should be the gamma switch. Gamma switch, as long as that's checked on. So you should have the gamma switch. Make sure that's on. And then I changed it to that yellow. So it might be a different color. So I did it in yellow so it highlights on my chart and I can see the contrast with the black background. Just make sure this is checked on and you can switch the background color to what you want. But that should be on the chart. If it's not on there, Penny, then send me an email. Okay. So send me an email, chrispulverpub@gmail.com, if you're interested. So if you would like to, add dynamic trend, I can get you hooked up with a really good affiliate discount. If you like to add Tanuki Trade, which is available on TradingView, they have a plugin and then they have a live web app. I have really good discounts with both of them. Okay, so just send me an email. I'll give you the link if you're interested. Again, it's no pressure for me. I'm just like, look, if you want to trade this stuff every single day, this is the best way I can do it with confidence. So, real time on their web app and then on your TradingView charts, which we look at every single day. So this just kind of helps me plan. And that is a big part of the battle. Planning the day, planning your trade, and then executing accordingly. And it's always nice to see a good plan come together. So send me an email, Tina. Yeah, send me an email. chrispulverpub@gmail.com. Send me an email. I've had, 100 plus traders that have asked me about it. So I'll send you the link. I'll give you both links so you can do a little digging and homework. I mean, one is gonna this one is gonna be my package. This one is like $945 a year. My package through this one with TradingView and their live web app is like $450 a year. So obviously you want to save some bucks. That's cool. This is real time. This is not real time. This one gets updated. TradingView put on a restriction to this, so they can only update this gamma 5 times a day. So roughly it's like every 90 minutes they update it. But this is real time. But I love this. This is why I like dynamic trend the most. Just because this is real time and it's right in my chart. I can go SPX, I can go SPY, I can go Qs. I can go, Tesla's highly traded with options, Nvidia highly traded with options. So just, big levels, lots of liquidity. I mean, I've seen some days on order flows that Tesla traded with more volume than the SPY, which is crazy. Okay. So, and in fact, I'm wondering like my modified collar trade, that actually might be looking pretty good on Tesla. Do you get all three charts for 495? So no, this chart here is like 945. So 945 for the year, and you get all this in a 0 to 1 day bundle, 0 to 1 day DTE. The Tanuki one, you get the web app plus the trading view indicator, and in addition to the trading view indicator, you can get these other tools. Let me go into my overlay. There's some other crazy stuff here that they throw on for pretty nice tools. There's a screener. I'll pop this up here. It's there we go. So you have up to 200 symbols on this one. That's up to like all the skew from like 0 day and 1 week and then 1 month out. There's all sorts of pretty cool tools to have. So there's like 200 super liquid instruments, lots of option flows. You get your skew prices. So anyway, I mean I can teach stuff like this. I actually had a meeting with their development team a couple weeks ago. There's some really good strategies you can pull from, and these are all like very liquid instruments. And then I'm trying to think here with the optimum monthly. There's monthlies. I like to focus on the short term. And then my overlay, I think I had a probability cone. I just have to go to, yeah, there it is. Remember, see this probability cone? So if you're going out in time, obviously this is 0 DTE gamma levels, but my probability cone, again, that's all based on an options chain. Like everything about options to me is it's just risk management and it's probabilities. So you're trading price and time, and you know like all of the elements of your trade before you ever place an option trade. And to me, that is awesome. Like that is the only reason that I'm up like 600K for the year, is because all I trade over and over again is thousands and thousands of trades that are based on probabilities. And as long as I don't go all in on one thing, I've got a nice little strategy diversification. I'm trading a variety of assets, and probabilities tend to work out. And that's my edge. So as long as I keep my risk management pretty solid and I win enough of my trades, I'll make money. Like it doesn't have to be difficult. It's just have a good plan, trade a good plan, and that's trading, right? All right. So like I said, whatever I can do to help, let me know. Chris Pulver, pub@gmail.com. Okay. Let me go back to make sure this is still on 0 DTE. So yes, yes, yes. Okay, we're good. All right, I'm going to go back to the SPX. So SPX trading at 68.97. Now, just to talk a little bit more about this, this yellow zone, above it is positive gamma, below is negative gamma. Okay. I would not be forcing trades up to 69.25 today until I see a bit more signs of life that this is going to start going back up to this negative or positive pivot point. Because if we start going lower, just think about this for a second. If we start going lower, 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 this becomes harder to reach based on the market maker's expected move. Yes or no? Right? So, I mean, this is a good sign. We just have like one little low and we come right back up. If we get to 69.05 or above, then we probably flow towards 69.20, 69.25. Keep an eye on that for the day. Okay. All right. Let me take a quick look at our daily profit play. It's 947. I just want to take a quick peek. Plus minus at 17. I'm probably not going to take a standard daily profit play today because it's going to force me to go pretty close to, 25. That's a gettable gamma level at the 50% ATR. Down here, the amount of skew in this market still is impressive to me. So 68, 55, and 50. I mean, for this trade, I could get 80 cents. Okay. I can get 80 cents. I don't love the, that would be up 25 points, and we're having a plus minus 17. Um, I don't know. I kind of like the idea of like selling it a little bit higher. Here's what I'm thinking of doing on the day. Um, I'm going to try for, let me do some calculations. Our VIX is at 14. What was our high for the morning? So we're at 1424 VIX right now. We have a 1462 was our recent high intraday. That was around 6:30 this morning. So 14, I'm going to move this down. Okay, are we going back? I mean, we had a sub 14 VIX, which is the lowest of the year. Um, if order flows start to come in, we get back into positive gamma territory, like we are right now, like we're back to the positive negative gamma pivot. We start flowing up towards 25. I mean, that butterfly spread looks pretty attractive, right? A bull put spread looks pretty attractive. If I want to look at kind of calling the top on the day, we have a VIX of 14.6 or current VIX at 14.2, 14.6 divided by 16. You know, a 0.9% move. It's going to be difficult for price to move 0.9% today. But in case it does, we can calculate out from our close yesterday. 0.9% is way up here. We'd have to have like a crazy flow on the day. That'd be up to around 69.70. 69.70 top with the VIX at 14.63. So unlikely to see price get above this today. And then to the downside, we had a slight gap lower. Let's go 0.9. 68.38. We'll go bottom VIX at 14.63. So as long as the VIX is not spiking up to 15, 15 and a half, 16, this is a pretty safe low to call. Let's see, 68.38. I don't think we're going to get there today at all. I don't think we're going to get to either one of these levels. Okay. If anything, I would say prices most likely, if we're going to have like a pretty calm day, price is probably going to stay, just above 6,900 and most likely below 69.25, 69.30. Remember, there's still a gap fill opportunity right here. So if we come up and fill that gap and the market is infused with positive gamma, we probably head a little bit higher into the end of the week. Holiday trading, Santa rally. Is it all still happening? This will be an important week to find out. Okay. All right, Larry, you got 10 wides. You got 35 by 45, right? 69.35 by 45. That's pretty good, man. I don't mind that trade. 35 by 45 and then 68.75. Okay. Were those the same deltas, by the way? Or did you just skew that thing? Let's see here. BTC not an option till we break. I mean, Bitcoin is always an option, but I just got assigned some shares of IBIT this morning. I'm thinking I got assigned on almost every account. Let me check. So let me check here. IBIT. I had some naked puts. Bull put. Check this one here. Yep. So I just got another chunk. My 59 got assigned. So I had a 59, 56, 53, and 50. My 59 got assigned. All right. So I'm going to add another. That's a 50 call. I'm going to add a. See my break even on that chunk. So if I get assigned in all these levels, we're trading at $50 right now. This expiration here. So I had a 59 and a 56, 53, and 50. So my break even on this with the credit that I pulled in, my break even is like 52. Let me check my spreadsheet. I think it's $52 and just over $52. Break even would be 52.36. So if I sell a call here, my $50 call is trading for 11.25. That brings my break even down to like $41. So I can still make about $9 a share on Bitcoin. My break even goes from current price is 50. I'm down to $41 break even. I mean, I don't want Bitcoin to go lower. I mean, obviously it can. I get that we could have like another painful phase for crypto to kind of flush out all the loose hands and the non-believers, I suppose. But anyway, I'm going to add another covered call. It's kind of my summary. Is I'm going to go out. So I've got 564 shares, and I just have 400 shares covered. I'm going to add another covered call. This is out to January 15th. So I'm just turning a lot of my exposure on Bitcoin into a like and it's a trade. It used to be like literally I was like, oh, I'll keep some percentage exposure. I'll let it run. I'll dollar cost average in. But after this, 30% correction, I'm like, all right, Bitcoin, you want to play that game? You want to be like the, shittiest asset for 2025 in my portfolio? Then I'm going to treat you like a trade. I'm going to sell some premium. I'm going to lower my cost basis as quickly as I can. And I'll just turn it into an investment trade, which is I get in, I lower my cost basis, it gets called away, and I flip it for whatever percentage that is. So if I get called away for, $9 a share on 500 shares, oops, 900 times, is that right? 9 times 500. Yeah. So I'll turn it in 4,500 bucks. So my investment would be $52 times 564. So I've invested about $30,000 in Bitcoin. That is about a 5% position on this account. So about a 5% position. And if I can make 4,500 bucks out of a $30,000 investment, I'm making about 15% on that. I'm okay. It's a trade. What happens if Bitcoin goes to all-time highs again? Well, I'm sacrificing the upside in order to protect my downside. And that again goes back to what I keep saying, which is when you trade options, it is a trade-off. You have to give something up to make something. That is a sacrifice. I will continue to make those sacrifices. Okay. So anyway, I'm going to do it for this account because I just got assigned another chunk of shares. So I will go out to I think on this one, I might do either the 52 or the 55 and pull a little bit extra premium. So let me go out to, I'm going to go out a little bit here. This is January, the 55. So this one's not bad. I can get over $1,000 of the 52. That's like it's literally my break even point. That brings my cost basis down to like $42. So I don't mind getting a call away at 42. I've got a $50 and a 52 covered call. So I'll add this one here for another one contract. See if I can get 1035 just above the. I want to be just above the bid price. I mean, the ask would be great, but I'll go 1040 here, see if it fills. 1040 is not filling. Let's try 5 cents under 1035. Filled. All right. So now I'm in with 564 shares, and I'm covered at 50, and I'm covered at 52. There. Actually, let me ungroup this one. So call and call. These would be my covered calls. Group. So here for these calls, all right. So 50 and 52 are covered calls for the 564. That gives me 64 shares running free, which is fine. And if we get back to all-time highs, great. Market going up. Perfect. So, I want to show you that butterfly spread that I talked about. I've got to get these IBIT trades in for my accounts. These all got assigned overnight. I might have a couple more assignments coming into the end of this. Well, I guess by tomorrow because this is the 31st. So if I take an assignment on 56, 53, and 50, same thing. I get assigned, no problem. I'll throw out some covered calls. I'll lower my cost basis and plan on making a few bucks at the end of the year. And I'll still have some shares left. I'm just not trying to tie up a ton of dollars. But anyway, let me see what that SPX butterfly is trading for. So trade SPX for today. We were looking at the 15 by 25 by 35. Okay. This is trading for like a dollar, what I say, $1.40, $1.50. Now it's trading for $2. I mean, you're up 40, 50 cents. If you want to take the quick profit, great. If price goes a little bit higher, so if price does come up to this 69.20, 69.25, that trade's probably going to offer up maybe $100 a profit. Like these are good trades. That visual roadmap and in a simple like cost effective strategy can be pretty good daily trading. If it wasn't for a tool like this, like I'd have no idea why 69.25 matters today. But what gives me a game plan is if we're above 69.05, that's positive gamma, and I look at my biggest strike, 69.25. And and again, I teach this all in double ups. I teach this for best practices. I teach this when I do some classes for dynamic trend and Tanuki trades. Like I use these tools. I also think that if we can see these levels like a gamma level inside of a 50% ATR, these are also very realistic levels to try to go after. Okay. It's very cheap to go after a level way up here. It's very cheap, right? I could probably put a trade on that's like 15 to 1. However, it is difficult for the market to get to a 100% ATR. Okay. 6940 pin, 15 wide iron fly. Interesting. Okay. That's pretty sweet, man. 40K a year? No, I pay like for this indicator, I pay 3,600 because I have a whole suite of stuff I use in the background. I had them build me a 0 DTE bundle that's $945. So it's like a third of the cost. Actually, more than that. It's a bigger discount. So they built me a pretty sweet package for me exclusively that they said I can share this with other people. So no, it's like $945 gets you everything you see on the screen. Okay, Vivek, that's a good trade, man. 69.40. That's an interesting play though. I get that it's cheap, man. That's awesome that it's cheap and price goes up. That's great. So good stuff. Yeah. I would have wanted to do a little bit more work around that 69.25. We'll see what happens for the day. But here, like I said, I keep going back to this. If you do this 0 DT stuff with me, you will see that it's kind of a repeat day. It's like our routine is: are we positive or negative gamma, and what strikes am I watching that are popping up on my radar? If it's positive gamma and we're within the 50% ATRs, I mean, look, I'm giving you like years and years and years of watching this stuff play out. Like I've traded 0 TT since 2022, and I've taken thousands and thousands of trades. It can be as simple as this. If we're positive gamma and price that I can go after and try to target is either one, directionally going towards this strike, benefit from that direction. Or two, if you want to pin that strike, benefit from that directional move and trying to get inside that profit trap. If it's within the 50% ATR, there's about a 60 to 70% chance that price can find it during the day. If it's a 100% ATR, it's a cheaper trade as far as, if I want to do a butterfly spread, it's even cheaper. If I did an iron fly, it's even cheaper. But the probability of hitting that is much, much lower. So my favorite trade is when I see a big fat obvious gamma level and it's positive gamma and it's, a decent amount of space and it still hits the 50% ATR. That to me is a good trade. That's worth taking almost every time I see it. And guess what? That's pretty much what I do for my double up service. Okay. So these trades, like, every iron fly or every butterfly is offering probably 4 to 1 or 5 to 1 or better. Sometimes I get 10 to 1. Sometimes I get 15, 20 to 1. It just depends on the setup. But it's nice to know that the broker, the setup itself offers, let's say, 7 to 1 or 6 to 1 or 8 to 1 or 10 to 1, because if you get 1.5 to 1, That's still good. If you get 2 to 1, that's awesome. So, and we've had a lot of trades close out for, 250% return on risk. We've had 405% return on risk winners. So good stuff. So your 69.25 was brought up. So I targeted that low risk 75. Got it. Got it. That's cool. Yeah. All right. Let's keep going. So let me go. I'm just gonna do some account combing here. Penny says that these recorded available. Yeah, this session will be recorded. This Blake, are we pushing this on YouTube? I think if this is streaming on YouTube, it'll be on the youtube.com/financial wars channel. And just make sure it's timestamped for December 30th, and you can go back and revisit this anytime you want. Okay. Let me go into. I'm just going to look and see. I think multiple accounts got assigned, at least another 100 shares of IBIT. So that one got assigned. This one, so I'm covered at 2. I got assigned on the 59. Yep. So these got assigned. All right. So I'm going to add in the, it was right around $1,000. I'm going to go out to Jan 15. This is 9732. So January 15. I'm going to do the 52 for another 100 shares. See if I can get 1020 on this one. 1020 got filled. Okay, same thing here. I've got it covered for 4. Go to 52. So you want to get 1025. Hopefully 1020 will fill. Okay. So what I'm liking about this is right now, if I can get $11 for an at the money, okay, I mean, you're getting a 22% premium on your Bitcoin or your IBIT. Yes, I'm going out 12 months. Okay. But for me, it's like I get that Bitcoin might go back up to all-time highs, but if it just stays where it is, I can discount my price by about 20%. To me, that means that from here, Bitcoin can technically fall another 15 or 20%, and I'm not really hurting myself anymore. Right? Like I'm lowering my cost basis. That's the most important thing is like Bitcoin's already down 30%. If it falls further, I want a bigger discount, right? So, now my break even is down to the low 40s. That gives me a little bit more cushion to just kind of, hang out and eliminate some of the pain that Bitcoin has caused these last like 3-4 months. All right. Perfect. Thanks, Blake. Last trading hour today on your main. Maybe if I'm live, I might just do a video. That's why I posted a 45-minute video yesterday. So usually if I'm live, it's going to be youtube.com/Chris Pulver. So right here. But I use Restream. I'll just show you what I do in the background here. So I use Restream, and I can push to all sorts of channels here. So I can go my YouTube channel, which is youtube.com/Chris Pulver. I can do the Trading Pub Prosperity Pub homepage, which is youtube.com/Financial Wars. I push this out on my personal like Twitter or X. I push this out on Facebook as well, and LinkedIn and all these other places. So yeah, I mean, I'd put this on like all my social channels. So I'm going to take this link and I'll throw it in Telegram. I'll throw it in my Discord. So I just try to make, everything as readily available as possible. Okay. All right. This one is covered. So got the 50 and the 52. Okay. Just going to double check on my IBIT. This one is covered for 2. I need another Okay. So I'm just going to go through and get some covered calls in on IBIT. And then I want to read through some waterfall income for you here in about 5 minutes. So we just had a live session yesterday on waterfall income. The trade that I posted is still valid. So as I'm going through the presentation today on waterfall income, the trade is still valid. You want to throw it in. We took a trade on XSP yesterday. So that trade is valid to put it in your broker platform. This is 7634. Going out to 52, trying to get 1020. You dog. 1015. Fill. Come on. Filled. Okay. Need another kind of shares here. 72. Okay, another contract. Okay, no problem. Covered. 52. Covered. Okay, this is assigned at 55. Let's go. I think 52. I'm gonna get $1,000. So I go from 55 down to 45 if I put in a covered call. That's fine. I get it called away for, $7. It's a little flipperoo and a repair. Let me see here. This one, if I go 52, if I go 55, I still make, $900 versus $700. See, I don't mind lowering the cost basis by 1,000 just to get my cost basis down lower. So I'll do that. I'm gonna take the $1,000. That is 6761 filled at 1020. Covered. So this was the 59 and 56 assigned. Okay. So I'll do another 200 shares here. So I'm covered at 3. Need another 2. 1020. Filled at 19. Okay, good. It's interesting how you can only get filled at you put your orders in for the 1015 or 1020, but it fills you at 1019. Even though you can't, I don't think you can get filled at the pennies. It's asking to do increments of like 5 cents. But anyway, this one shares and it's covered. Okay, it's fine. Covered for 2. 5627. Filled. Just got assigned. Lower the cost basis. Okay, filled there. It's going to keep going to get these all filled and taken care of. So covered at 3. This one probably going to throw out another. This one I was assigned at 59 and 56. So this one I'll do. I mean, 52 and 53 is still fine. So just going to do some repairing on Bitcoin. All right, this one needs another. So I have 300 shares covered. I got assigned 1. So I need another 100 on this one. 52, 1020, 646. Filled. This one needs one more. Okay, price is back to flat. We're at 68.99. This one's a 59 and 56. So this one needs 2. So covered, covered. Okay. This one needs two. 600 covered at 600. This one is likely going to need. All right, let's cover it at 52. Okay, a couple more to go. And then we'll talk some waterfall income. Has not been assigned yet. Most likely coming. Oh, that's out there. All right. And then this one, 200 shares assigned, covered and covered. Got it. Got it. All right, cool. So I'm all square on that. Generated about a 22% premium on those Bitcoin positions. Again, it's part one to lower my cost basis. Part two, if it gets called away, it's an easy repair. Here is real-time price for the day. We're kind of flat. Again, we're playing games with the positive and negative gamma. If this is a choppy nothing burger day, okay, fine. It's already after 10 o'clock. Like, I'm not going to force a trade. If I want to look at some butterfly spreads, like I discussed, I mean, this one still is gettable. This one in the middle is gettable. Maybe this one's cheaper all the way down here. Question is, do I want to put that much out there? So if I'm looking at like kind of pinning levels today, 6,900 could be a pretty good pin price. 69.20 could be a good pin price. And let's say 69 like 70 could be a good pin price. And depending on how I spread those, like if I go 10 or 15 wide, I could possibly put three traps in on the day. So my brain is kicking around these thoughts, right? So if I can get a profit trap in here, profit trap in here, profit trap in here, if I want to give them a chance to run to the end of the day, if we're hanging out at any of these levels and it's in a profit trap, maybe I get a big winner at the end of the day. I don't know, Dave. I think that's been an official finance term for at least 20 years. I don't know. I've heard that thrown around a lot. Um, Situation that receives a lot of attention, but upon a closer examination proves out to be little to no real significance. That's according to Wikipedia. Yep. So, all right, let me just check on something here. I am curious on SPX what the day kind of looks like. So, could I throw in a profit trap on SPX? Which, by the way, did I check all accounts here? This one. So we're covered, no problem. This one has a 55. So this is covered. Okay, just want to make sure I'm all good on that IBIT stuff. Then I'll go to SPX. So SPX today, if we're going to hang out around 6,900, this could be a pretty cost-effective way to trade it. Like I said, maybe the like 6970 zone and the 6,900 and the 6,925. Now, if I'm going to do this today, what I'd like to see is I want these prices to be overlapping. So if price does not exceed, I want price to basically be, less than this high, and I want it to be more than this low. So I want price to stay above like 68.70. I want price to stay below 69.45 and see if I can throw some traps in here for the day. Okay. Now I'll figure out what the total risk is, how wide I need to go. I think it's going to be pretty cheap on the put side to do like a 20 wide at 68.70. So if I went 68.70, let me check something out here. So if I go 68.70, so if I go, let's go 90, 70, and 50. So it cost me 250 to make up the 20 bucks if we go to the downside. Okay, so let me write that down. So I've got profit trap. Move this up here. So if I box this guy in, that would be pinned at 70. So 90, 70, 50. That pays pretty well. Just like that, it's up 40 bucks. Let's see. The most expensive trap is going to be around this 69, 69.05. But I think I might pop this guy in. So let me just make sure we get into a profit trap. If we go 20 points lower, that's 68.80. I mean, that gets me 600 or 700 bucks, if I'm right. Um, let me before I take this trade, I'm curious like what the 6,900 zone looks like. So if I go 69 by 69.05, let's go 20 wide here and 20 wide here. That's what I don't like trading like at the monies on some of these butterflies is it's like a less than 2 to 1. Um, it's somewhat cost effective, but it's just not great. So that's the hard part is like biting the bullet and trading the stuff at the money. It gives you like a 2 to 1. You know, this one's like a 1.6 to 1, which I don't love. So if I did just the 6,900, 69, 69, go 15 and 15, I'm still risking 400 bucks. Like that's just it's not my plan. Like this is a what 2.2, 2.3 to 1. No thanks. So that makes it a little slippery. If we stay at 6,900, I don't really have a good plan for this area, right? Like it's very cheap and very profitable if price comes down to this zone because I'm risking like 250 to make 1750. That's a great trade. But if price just goes right here, this trade is worthless and I need to have something that's going to give me profit in here. And it's right now, it's too expensive. So unfortunately, I don't know. It might be one of those days where it's like, I just don't like the trade. I love this trade. I could love this trade, but I don't love the one in the middle. And if the middle's not offering like a 3 to 1, 4 to 1, 5 to 1, this is 10 to 1. This is 10 to 1. Great. You know, but in the middle, if it's garbage and it's not even 2 to 1, um, what I need is like one of these has to be a big winner. So it's obviously easier to get paid on the upside or downside because your profit is so much larger. But if price slips out of the middle, then that's my biggest risk as well. 69.20. Yeah. So the up and downside. So Larry posted it there. The upside and the downside, if you're going directional, it's actually very cost effective. My concern is like I don't really have a great one in the middle. Now, what I could do is take a bunch of cheap 5 wides. And we're just talking shop here, so let's figure it out. If I wanted to go 69, let's go 60. Gosh, this is such a difficult trade, by the way, because it's so easy to not hit our price target. But if I did a 69 here, okay, this cost me 60 cents. And if I think we can get back to that positive gamma around 65, I could also do, so this one's going to be like a 50 to 60 cent risk. And I can get, 8 to 1 on this one, give or take. So if I can make 440, so 440 over 60, I get a 7 to 1, but it has to be like freaking perfect inside that 5 wide. Okay. And if I think 6,900 is a pin price and then maybe 6,905 is a pin price, let's see. I mean, is it cheaper to get the put side? If I go put it 69, 10, and 90, 2 to make 8. I mean, that's 4 to 1. I mean, that's better. So 15 wide is not good though. Like maybe 10 wide in here. So that would be, I'm just going to draw this out before I look at the trade. So if I have the box this way, so if I go from 69.10 down to 90, So I'd have a trap in here. I'd have the trap down to 50 as well. And then I could also put a trap above the 10 and incorporate this like 25 and 25 and 30 zone. I mean, I could put a profit trap in for the day. The difficult thing is in the middle, I probably have to do a couple of 5 wide traps in here where my debit's going to be like 60 cents and that gets me covered, or it's going to be like a 200 and some dollar risk, like 250 to make 10. So it's not great, but enough to at least, give me some profit potential here. So let's see what this one looks like. That cost me 220. All right. Is it cheaper to go here? It's about the same. So this 215 to 220 on this fly. Let me see what it is on. It should be the same price. It's the same price. So I could possibly stagger. I think I might do this. I might. This is what happens. I threw a bunch of profit traps in. It's like, well, shit. Now I've got 4 trades in. I need one to trap. That's what happens. So it's a slippery slope of like not over trading. It's easy to think like I'm going to throw profit traps out there. I'm good for the day. And then what does price do? Like, look at this. I will show you exactly the good and the bad for this setup. Okay. If I did that where I put in profit traps in here, if price is right here, can everybody see these boxes, by the way? I know they're all shaded in, but here's one box. Okay. And then there's another box just above it. And there's another box below it. So there's 3 boxes on here representing like 3 potential like trap areas. Okay. The best trade is going to be in the middle of the box. That's when I'm optimized for my profit. So this is going to be the most money right in the middle of the box. This is going to be the most money right in the middle of the box. Okay. And the most money right in the middle of the box. So you might have this perfect plan of everything is going to be like, okay, I'm risking about $600 today, but I've got, $1,000 up top and $1,000 down below and, $800 or $900 in the middle. I should make some money today, right? But what happens if near the end of the day, price settles right here? Right at the bottom of this top box or right at the top of this middle box, I make like $100. So what do? Well, I take a loss here. I have a tiny little win and a loss here, and I'm risking $500 or $600 total, and I still net out, minus $500 because I have a tiny little win at the top or the bottom of these boxes. There's still risk in the trade. This is a great plan for the day. Okay. So can I manage this trade into the end of the day? Sure. If we're trading around 6,900 or 6,905, there's a lot of profit potential right there. If we're trading down to, 68.80 or 68.70, there's a lot of profit potential there. If we're trading up to 69.20, there's a lot of profit potential there. So the goal is I need to manage my winner, right? If price is generous enough to be at a strike that's giving me a good profit or return, I need that to I need to manage that. Or this is what if you overlap. If you overlap, that's fine. Just make sure when you're overlapping, you're probably going to want to overlap by like 5 points. And what are you doing with the overlap? Well, you're trying to like cover your costs and maybe even hit like a sweet spot where if you're at the bottom or top of one of these boxes, it overlaps and you can grab a few extra bucks. Right? Just make sure you're not overlapping strikes and you have one's a buy call, one's a sell call, and it offsets and you don't actually take the trade you want. It's just, make sure you understand what trade you're taking. Okay. So, like I said, if I'm throwing out the trade, do I think it's a good setup for the day? I do. The middle side kind of sucks because it's a bit more expensive, but maybe doing I probably have to do like close to $400 here in risk and then about 250 here and about 250 here. So on the day, I mean, it's not like that's an offensive amount of risk. It's like, okay, so I'm risking, $900 on the day. Could I lose all that? Yes. Right. Could I win? Is one trade going to win $900? Well, this one can. This one can. This one can't. This one could make me like $800. So it's like I've got to be perfect in the middle in order to make up for all of the trades. So, this planning is really important because there are plenty of times that I've taken this trade where I thought I've got the day figured out. It's not going to go higher than this or lower than this. I'll put in my profit traps. And then what happens is I get that sliver of a win and I still end up taking I mean, again, the reality is it's like it's a small manageable loss on the day, but it's still annoying to take a small loss on the day because the winning side never offered enough to cover the risk of everything else. Right. So it's a good plan. It's just you got to manage your winners. And at the end of the day, it is frustrating to get price if price stays inside this blue box, which is 3 of them, because that'd be my trade. If price stays inside this blue box, I would expect to win the day, right? But instead, it's like, well, based on how I structured it, how I traded it, how my strikes didn't overlap or did overlap, it's like if I didn't make enough money, that can be frustrating. So I think the reality is I probably don't need to do that today. I just don't need to. But I think it's been, enjoyable just to have a talk about it. I look for good trades like this during, kind of normal non-holiday conditions and get a good sense of the market's direction. Right. So what has changed so far in real time? Well, 6,900 is becoming a little bit more prevalent and popular. The 50% ATR, 100% ATR. I don't think we're necessarily going to break to fresh lows, but we certainly could. I just think that if anything today, it's like we're probably going to hang out around that positive negative gamma. So 6,900, 6,905 seems to be a pretty sticky level today. 6,925 might be difficult, and then probably some support around this like 6,890 zone. Remember, the day was about a plus minus 21 when we started trading. So overall, like pretty quiet. VIX is 14 and change. So we'll see. All right. While we're at it, let me do this. I did talk some waterfall income yesterday. We did have a live session. I did post a trade. We have a pending order number 132 that's out for our this trade is still valid, by the way. If you want to put this in your broker platform, that's waterfall income. So I want to talk about that right here, and we'll make this pretty quick. But I would like to see if anybody wants to jump in and grab that trade. You can do that. So here's waterfall income. And this was updated because we have some live trades. Let me see. I think Deanna may have hooked me up. Oh my gosh. Did she start entering exit dates? Yes. Yes. Okay. So we're starting. So this column here, this has had some exit dates updated. So Deanna, thank you so much. Added some exit dates. Very good. So now I can start adding how many days these were held. So a lot of these trades we didn't have to hold very long. We'll find these other ones here. Okay. So I've got to go in through the classroom alerts and just figure out where these alerts. The history is saved. I've just got to go add the exit date in to figure out how many days these trades were held. That's all. So anyway, okay. Let's go to this right here. So on waterfall income, we have 132 trades that we have taken. Some are live, some are pending, but we are at 124 live trades and our win rate has been over 94%. But the goal of this service is to win about 15 to 20% return on risk. I have a whole plan for 2026 that I'm going to tighten that up where I want a bit more reward. I want a little bit less risk. I still want some margin for error in our trades. We have a really core strategy 1, strategy 2 that I teach quite a bit. There's actually